Just to let everybody know, we'll be starting in 2 minutes. Okay, it's 11 o'clock here in South Africa, so I think it's time for us to start. Just so the panelists and the attendees know, I have 2 screens in front of me, so if I look like I'm veering off, it's because I have some notes on the other screen. But welcome to everyone to our webinar today covering the fascinating topic of litigation, financing and funding across Africa. Just to let everybody know that this is being recorded on Zoom. So anyone that has forgotten it is happening or has got caught up in meetings or is watching the election results coming in the US, they'll also be able to access a copy later on. And obviously anybody that wishes for a copy can also contact us. I am your host. My name is Rob Green. I'm the CEO of the GRM Group. We are a human capital focused recruitment and research house with offices in Africa, Asia and in Europe. And part of the group is GRM Intelligence, who released the original research report on this topic of litigation funding across Africa earlier this year. We are incredibly honoured to welcome our prestigious panellists, whom I will introduce in a moment. And we are also delighted to welcome guests, or we will be welcoming guests as the time goes on, from over 18 different nations today, across Africa, across Europe, China, and at least one person from the US. Who's probably been up most of the night as well. Just to introduce how this webinar has come around, it's really come around as the result of a fantastic research report which was authored by Rain Handley, who joins us on our panel today. This was released in February and March of this year, which we sent to many thousands of people across the world who we believed would have an interest. It was incredibly well received, and on the back of that, we decided to host a number of seminars. This was pre-COVID, so we had already organised 2 in South Africa. Many of the panellists you see here today had already kindly agreed to sit on those panels, and then we were looking to take it further and further and further, but sadly, as we all now know, COVID-19 put pay to anything like that. So we decided to let the dust settle. I think, we can all say that for the first few months of this year, or certainly of the COVID lockdown, we were all receiving many, many hundreds of invites to webinars and seminars. So we thought, we'll just let the dust settle down and we'll pick up the subject, this incredibly fascinating topic later on in the year. So, I'm obviously, as I mentioned, I'm delighted to welcome such prestigious guests on our panel today. I'm just going to introduce them briefly to those that are attending, and then obviously I'll welcome those to expand a little bit further as and when they can. But we are joined, and I'll go around my screen, by Rain Handley, who's Head of Research and Analytics for our GRM Intelligence brand, Chris Schoeman, who has been involved in litigation financing for over 30 years across Africa. Sifo Kazi Kayana, who's head of dispute resolution in Johannesburg for the international law firm CMS. Mark Biggs, who's the CEO of Eminent Crisis Management, with a group that is involved in asset tracing and tracking across Africa for many, many years. Dr. Patricia Nascimento, who is head of Herbert Smith Freehill's German dispute resolution team and a member of the EMEA disputes leadership team as well. And finally, last but not least, Nathan Landis, who joins us from Australia, who's an investment manager with Umbiie Bridgeway in their Perth office and is responsible for due diligence and managing funded cases in many jurisdictions, including Africa. We're also joined on the screen by Natalie Reddington, who's GRM's marketing consultant, who is sitting in to moderate and put out any technical fires that we may have. Just to explain the format before we kickstart, we do have structure. All the panelists have been sent an agenda, which we will try to stick to, and I will try to moderate. But with any of these webinars that people have got experience of, questions and points will come up during the program that we will want to explore further. So whilst we'll attempt to stick to the agenda, we may veer off a little bit. And obviously I will be asking each of the panelists to use the hands up button, which is a feature of Zoom, if they wish to expand on any points, and I'll be coming back to them. We also have the Q&A panel, which hopefully all the attendees can see, and I will invite you to write in any questions you wish answered by the panel. If you could put the name of the person you'd like it addressed to, or all panelists, that would be useful for me, and I will then, at the end of this session, I will then ask everybody. Okay, so without further ado, we will open the discussion panel into litigation funding and financing, third-party financing, whatever you wish to call it, across Africa. And I was going to direct my first question to Chris, if I may, just to give us a little brief introduction into third-party financing, litigation funding, and its history as far as you know in South Africa and maybe across Africa. Chris, if you wouldn't mind.
Thank you, Rob, and welcome to everybody. Litigation funding in South Africa is completely unregulated at the moment. I'm expecting it to be regulated because it's starting to play such a very important role in the fulfillment of our constitution, especially section 34 thereof, which gives everybody the right to access to the courts. But that is all well and good in the constitution, but the problem is, of course, funding it. Funding your access to court is a very, very expensive procedure in South Africa, and that is why litigation funding plays a very important role. Litigation funding must first of all be distinguished from contingency funding, which in South Africa is done under the Contingency Act and is done by attorneys who act on contingency in particular cases, but their fees are very limited to twice their normal fee or 25% of the proceeds, whichever is the smaller. And you can't really do it on that basis. So contingency fee agreements in South Africa are really nothing more than just an act. The real expansion of litigation for people that do not have the funds to litigate is in litigation funding. Now, that is, as I've said, not regulated, but it is legitimized by a decision which was given in the Supreme Court of Appeal. And for purposes of for completeness, I'll say the name of the case. It's PricewaterhouseCoopers Incorporated and others versus National Potato Corporation Limited and another. And it's reported in the South African Law Reports, SCA, Volume 2 in 2015. And it was initially reported in South African Law Reports, all South African Law Reports 20 in 2003, and that is the judgment of Southwood, acting judge of appeal. And I wanted, without laboring the point, I just want to give you the outlines of what he says is are the elements of a litigation funding agreement. He says, to summarize, an agreement in terms of which a person provides a litigant with funds to prosecute an action in return for a share of the proceeds of that action is not contrary to public policy or void. The illegality of such agreement or an attorney contingency agreement fee would not be a defense in the action. The litigation pursuant to such an agreement may constitute an abuse of the process, which is in appropriate circumstances the court may prevent, notwithstanding the litigant's right of access to the courts enshrined in Section 34 of the Constitution. Price Cooper Waterhouse's appeal must therefore be dismissed. There are two important elements. The first being that it is legitimate to do that. It's the contracts are valid, but it must not be abused. And that was actually in that same case, many years later, when it went on appeal, was emphasized by the judge that wrote the judgment in that particular appeal, and that is Judge Wallace, who warned against this process being abused. And one of the main points I'd like to make is that it must be done professionally, it must be done ethically, and it must be done openly. So those are the main issues. Presently in South Africa, it's pretty substantial law, and I will, when I deal with the pitfalls, I will deal with issues that may arise resulting from litigation funding.
Thank you, Chris. That's a lovely introduction there. Just moving on slightly, I'd like to ask Rain, if I may. Obviously, this is a very wide topic, but just from the research that you conducted, and taking it a little bit further than just South Africa, can you give us a brief introduction into what can be done currently? Is there any common themes across some of the African nations? Obviously, we're being joined, I can see in my right-hand screen here, we're being joined by people from all across the continent. So is there anything that stands out to you that can be currently done in other nations as well?
Sorry, I need to remember to unmute myself. I think the first thing is that, you know, every nation has its own unique sets of laws and case law to draw on. And so when we look at Africa as a continent, that's 54 unique, legal landscapes. And generally, I'm not going to run through every country now because we'll be here until tomorrow. But I think generally we see three kind of categories emerging. We see countries like Nigeria and South Africa where we don't per se have any like actual legislation handling litigation finance or law firm finance, but we do have some case law. Chris touched on some of the South African case law, for instance, which kind of acts as a guide. And in these countries, it is permitted, but there's a lot of gray area in terms of what litigation funders can and can't do. There are also then a second category of countries which categorically prohibit the act of litigation funding. And this is generally based on very old principles of maintenance and champity, which essentially, for those of you who aren't lawyers, maintenance is the principle of funding a litigation for which you are not the party to that, and champity is maintenance for a profit. And so generally, particularly in English common law countries, litigation funding has been considered illegal for these reasons. And then we have a third category of countries in Africa where it's not clearly prohibited, but litigation funding isn't clearly allowed either. So it's kind of just a big question mark. And in these countries, we tend to see a number of high net wealth individuals and investment professionals kind of getting involved informally. Because it's not exactly illegal to get involved in funding cases within that jurisdiction. but there's not a lot of case law either to go to kind of navigate the process. So that's kind of the landscape at the moment, and I think this is why, you know, investing in litigation funding in Africa can be somewhat complex, because every country needs a detailed review of, you know, the due diligence process of whether or not to invest in a particular case is different for every country. You know, whether or not it's allowed is different. What constitutes, you know, a fair agreement, and all of that is different for each country. So it's a really interesting dynamic landscape, and every country is independent.
Thank you, Ray. That's an excellent introduction for that. Moving on, there's a whole host of topics that I want to cover, and obviously come to each panelist individually. I want to get quite onto what type of cases is securing funding. Are there issues with collecting money, asset tracing and recovery, the potential downside from ethical considerations, the relationships between client, lawyer and funder, and some of the regulations across Africa as well. But if I may, can I just first go to Nathan and just ask for a brief overview of your experience of what type of cases you see are getting securing funding, and after that I may come to Chris as well, because obviously you've also had many years experience in that. But Nathan, if you wouldn't mind giving us a brief introduction into what type of cases you're seeing that can secure funding.
Sure. So the sorts of cases that we look at are primarily arbitration cases and enforcement cases. There are occasionally matters where we do go into the national courts, and the National Potatoes case that Chris talked about was one such example. So one of our predecessor firms, IMF Bentham, was the funder in that case. The cases that are securing funding at the moment range across the whole gamut of industries and sectors. So at the moment, we're funding cases the four corners of Africa, and they're a mixture of bilateral investment treaty claims. There are some commercial arbitration cases which may or may not be seated in African cities. There's one in particular that we've just completed that was seated in Johannesburg. And there's also a number of claims which come through the court system on the enforcement side, particularly things like non-performing loans, so acting for banks in performing recovery actions for them. So as you can see, it's pretty much any commercial dispute, however it might arise, whether it's under a contract or under an investment treaty, or in the case of the non-performing loans, under loan agreements. So there's a wide range, and we're seeing a lot more of it. And
just out of interest, is there, obviously traditionally, I suppose from a funding perspective, you would see, you would look at the merits of the case and look to see it to the end. But is there a case now where the investments are getting, for want of a better phrase, a little bit more interesting, where you potentially funders are not going towards the end, but then selling on that investment? Is that something that's happening at the moment?
There certainly is an emerging secondary market for cases that have been funded globally. We haven't seen it so much in Africa, but there have been some of the investment treaties that have come out of South American countries which have passed on to the secondary market. Whenever you're looking at funding, you're actually not looking at the merits first. You're looking at the recoverability of the claim. So you assume it's going to win. How do you get paid? And it's only once you've gone through that process of identifying where assets are that could potentially support that judgment or award that you then retreat in to look at the merits of the case. So it's a little bit back to front, but we can talk about that when we talk a little bit more about what the funding process is.
Excellent. And Chris, would you have anything to add to that in regards to the types of cases you've seen securing funding?
Indeed. My partner, Errol Elston, is one of the participants, and he's probably listening. We concentrate on commercial litigation as opposed to doing pure collection work And the problem that Nathan mentioned is not particularly a problem for us, because from the get-go, we only take cases that are against a defendant which can pay. We don't even consider investigating whether he can pay. So our defendants are normally big corporations, governments, government departments, that sort of thing. So the issue of whether they can pay or whether they can't pay doesn't arise. What arises in our case is very much is the merits of the case. That is very, very, very important. I cannot overemphasize that point. You've got to know your client. You've got to know the veracity of his case. You've got to know what you're doing. The other point I must mention, and I want to do that up front, is there's been a tendency in South Africa for the courts to say to litigation funders, be upfront, tell us this is a funded case, and then they order us to put up security for costs, which have been, in our case, on a number of occasions, the position. And how our business model works on the basis that Errol and myself fund the litigation, but we are funded by a funder, which is a hedge fund. And we, on our advice, they give us the money to do the funding. But they understand that we could be asked to put up security for costs, which we do. And it's only fair, I think, that we do that, because it's unfair for a company to be facing litigation against an impecunious litigant if he's got a very bad case. It doesn't really matter to him how much he spends, because he's never going to pay the costs.
Yeah, absolutely. Moving on slightly from that, I want to bring a question to Patricia, and then after that, Sifakazi as well. Just in terms of, and again, apologies, it's a very open question. I know it's a huge topic, but what are potentially, directed at you, Patricia, to start with, the potential downside and the ethical considerations to bring up? And if you could expand on that slightly.
Yes, thank you, Rob. So in principle, you would say what's wrong with litigation funding? It provides access to justice. It opens up possibilities where there would be none. But there is a dark side, and I call it the dark side of arbitration, because this is in particular where funding plays a role, and an increasing role. Arbitration, and in particular international arbitration and investor-state arbitration, that's a vulnerable system. It is open to abuse, to corruption, to fraud. And the reason is usually it is widespread across jurisdictions. The players have a very specific and a very limited role. They all concentrate on that role, and they do not look left or right. And this is where the dark side may come in. If you look at what an arbitration looks like, and you see all the people around the table, you see the tribunal, the parties, you see everyone with a specific role. Everyone in the room will be asked to go on record. Everyone but one. If there is a third-party funder, you might have a situation where you have people sitting at the table that no one sees, no one knows about it, no one knows what their role is and what their interest in the case is. And these unknown people might be the decisive people. And the reason is also everyone else in the room is subject to certain control, subject to certain regulations, but not the funder. There are no regulations on the funder. The funder is not subject to the same ethical rules or any other rule which binds every other player in the room. So you will have certain issues. So for example, the issue, wait a moment, who is actually the party in the dispute? You come into situations where you don't know who is the party. Who are you up against? The next one is, what about conflict of interest? That's a major deal in any international arbitration, and you spent a lot of time on this. And then you have someone coming in where conflict of interests is not an issue and no one looks into this. What about then confidentiality? What about the use of confidential information obtained? What about direct financial interests and at the same time a controlling influence? Who is actually controlling the case strategy? So you have rules regulating and sanctioning behavior of attorneys, but you don't have the same for the funders. And then in the end also, well, what about the costs? What about the allocation of costs? So you have this mystery party part of the whole arbitration being unknown and being actually without any control. There is some case law on this, in particular in investor-state arbitration. Just to cite one here, where in a case against Argentina, a very recent case where it says it is a fundamental rule of procedure that a party may not appear on behalf of another without disclosing the representation and being empowered to that effect. As a matter of fact, a party is entitled to know against whom it is litigating. There are some new developments addressing these concerns, and these are very important developments. For example, in the exit reform process, there is now a discussion about introducing the duties to disclose the funder. And it's not just the funder, but it's actually the funding arrangement and the specific role of the funder, because you might get to a situation where the actual party is replaced by the funder, but that funder does not have the same situation or role as the litigant party would normally have. And I think this suffices for the time being, Rob, as a general introduction, I believe.
I also keep forgetting to unmute myself. Thank you, Patricia. That's a nice introduction. Can I come to you, Sivakazi, and as we were discussing earlier, maybe expand on the relationships and the ethical side of it as well?
Absolutely. I think, Rob, a very important consideration when we talk about litigation funding must be around the attorney and the ethical obligations that fall on the legal practitioner when you are acting in such a matter. So as we all know that attorneys are expected to exercise independent professional judgment, number one, and secondly, we are expected to act in the best interest of our client. At the same time, as everyone would be aware from the South African case law, there are two types of funders that you can get in South Africa. You can get a pure funder, which is someone who provides financial assistance without any controlling mechanisms in terms of the process and what happens in the matter. Secondly, you can get a controlling litigation funder, which is someone who has a vested interest in the matter and also plays a controlling interest in terms of the process and the strategy of the matter. Now, the relationship between the funder and the client will be determined by the sort of funding agreement that they enter into. Whether it's a pure funding agreement, whether it's a controlling funding agreement is determined by the agreement that the parties entered into. However, the attorney ethical considerations arise in both instances. As a start, I'm just going to deal with 4 instances, for instance, where ethics must be taken into account or conflict can arise. The first arises at a very early stage, even when you're thinking about whether to advise a client on a funding agreement. You as the attorney already may be faced with a conflict because the minute a funder is in the picture, you are guaranteed that you will receive payment of your invoices. Not only that, they will be paid on time. So the first conflict is, do you advise the client on the funding agreement, and do you advise the client in accepting the funding agreement and the funding terms? And if you do that, are you acting in the best interest of the client, or are you acting in your own best interest? Secondly, it's transparency. You have to be transparent with both the funder and the client about the merits, the process, the prospects of success on the matter. You could, again, be led by selfish reasons and be tempted, if you're that type of attorney, not to disclose everything to the funder, for instance, because you're afraid that they might lose an appetite to fund the matter. And again, you're placing your own interest above the interest of the client and the funder. The third instant is the impact that the presence of a funder will have in the overall running of the matter. As practitioners, we must always be upfront with our clients, especially if the power balance between the funder and the client are not equal. From the beginning, we must let the client know that if this funder comes in and it's a controlling funder, you may end up in a situation where when it comes to strategy, when it comes to process, when it comes to how the matter is run, that funder has a very dominant role in terms of advising and instructing the attorney on record. And then lastly, it's to ensure that there's a clear understanding and regulation in terms of who owns the work product. The funder is paying, but the client is the participant in the litigation process. So from the beginning, how does legal professional privilege arise? Who owns the work product that comes about as a matter of working on that matter? All of that, of course, can be regulated by an agreement that the parties enter into and a mandate letter that the attorney agrees to. But those are some of the risks and conflicts of interest that can arise and which can lead to ethical issues involving the legal practitioner. I'm going to pause there for a second, Rob, and see if you've got any follow-up questions.
Sorry, let me just tell you this, that specific issue was addressed by Judge Wallace in the SCA. He said, in this judgment of PricewaterhouseCoopers, he said, it's another matter altogether to have a situation where an outsider to a dispute motivated solely by considerations of profit may be the sole beneficiary of the judgment. That is something that may have to engage this court on another occasion. Now, the point that's raised by you is very, very, very important. You've got to know that up front. And we now, as a matter of principle, disclose up front in the discovery process our litigation funding agreement, so that the other side, the judge, everybody else knows exactly and can lead to a lot of issues which can be avoided, frankly, and should be avoided. So our business model works on the basis that we control the litigation, but the client is told that up front. We take independent advice as to the viability of his case, and we have the right to appoint independent attorneys. But the attorney that is of his choosing runs his case and is limited to giving him the best advice possible, although we have the overriding authority to decide the tactics, as you quite rightly point out. It is the most important part of this litigation funding thing, is that everybody knows who's on board, who's doing what, and what is happening, and also what is the percentage of the proceeds that this litigation funder is going to get. And I can tell you that up front, right now. We don't work under 50% of the total proceeds. That is just a fact. And that has been brought about by 20-odd years of experience in doing this business. It's an expensive game. It takes a long time to recover, and therefore you must recover a decent return.
Thank you, Chris. I'm going to come to Rain, who's put her hand up there.
Yeah, just one point which I think is very pertinent for the African context is also the concept of, I think it's called barratry legally, but essentially it's bringing nuisance claims through to the court, which is a big ethical issue. I think particularly where Africa's judicial systems tend to be financially strained and there's already a backlog. So I think there's an important balance between, on the one hand, we want to engender access to justice and we want people that have valid claims to have their day in court. But on the other side, litigation funding can be used to try and, take cases through that might otherwise not have gone through. It puts a lot of pressure on systems. And there has also been ethical issues around, could litigation funders potentially try and fund cases in order to shift, legal precedents and create case law where there wasn't historically. And so I think within the African context where, the system's already strained, there's got to be a careful balance of how many cases do get funded, just as a side point.
I just very briefly answer that aspect. I'm sorry, Rob, I don't want to take too much time.
Carry on.
The simple fact of the matter is I was involved in a particular case which has been widely reported in the press, so I can mention it. It's the case of McCarthy versus Vodacom, where we knew up front that as the law stood in South Africa, at the time, we had to change the law. And the position in South Africa contractually was you can't agree to agree. You can't have an agreement to do something in future. And we thought that was unfair in the South African context, and that we used the principle, which is a South African principle called Ubuntu, and we went to the to the Constitutional Court, where that aspect of the law was changed. You can now have an agreement to have an agreement. In other words, two people can be sitting next to a call and say, I'll buy your bull, but I will only agree the price a year from now when this bull has shown his metal or not. So yes, I hear what you say, but I don't see any problem with creating new law by litigation funding, especially where there's an issue of equity involved.
Go ahead, Nathan.
Just to build on the point that Chris made, there was a matter that we funded about 5 years ago in Australia, which concerned over fees on credit cards, the amount that you get when you don't pay your balance in full by the due date. And we thought that was unfair, and a fairly large group of people signed up to the class action agreed with that. And we attempted to change the law on penalties in Australia to recognise that what was occurring in those circumstances was a contractual penalty. We ultimately lost, cost us a lot of money to get to that point, but I agree, Chris, that particularly in those sorts of matters which are the province of collective redress, unless you've got a litigation funder that's prepared to say, well, yeah, we think that law is wrong and it should be changed through the courts, then there's not going to be any incremental change in those types of laws.
Thank you for that point, Nathan. I'm just going to jump in here because one of the attendees has put a comment on the chat that I just want to address. Matthew, thank you very much for that. I'll just read it out. The issue of, oh, it's disappeared. Sorry, hold on a second. There we go. The issue of nuisance claims is a red herring. We are never going to invest in a case where there is a little likelihood of success. The aim is to make an investment and make a return. A nuisance claim, an unmeritorious one, would never be funded by a professional funder, nor are we likely to make a new law. There is too much uncertainty there. We generally rely on clear legal principles and already decided legal precedents. Is there anyone on the panel who would like to pick that up? Or is that a fair point?
No, I agree. That is, we are a commercial operation, and if you're funding cases that you don't think you're going to win, then you're not going to be in business for very long. One thing that the participants might like to look at is the International Legal Finance Association website, which ilfa.com, which sets out a lot of these sorts of principles and addresses some of the issues that Patricia raised on the ethical front as well. So commend that website to the attendees.
Yeah, we'll put that in, definitely. Thanks for that, Nathan. We're already raising a huge number of questions. Siva Kazi said, do you have any other questions? I was like, well, about 100. But, but we'll one at a time. I just want to bring Mark in because he is there. I've just made sure he's still around. Just in terms of a little bit of an introduction on the issues of potentially of collecting the money, the asset tracing and recovery side of things. If you wouldn't mind just doing a little bit of an introduction on some of the things that you've seen there, Mark.
Yeah, thanks for that, Rob. Yeah, there's a number of issues that tend to arise with regard to asset tracing, specifically in Africa, and that comes down to the problems with enforcement. Because as we all know, enforcement in certain jurisdictions is extremely difficult and sometimes impossible. So one of the key things that we always seek to do is look for useful points of leverage in different jurisdictions or friendly jurisdictions where the legal team and the funder can go to look for a useful asset. And that asset may not be particularly worthy of the entire claim, but could bring the other side to the negotiating table and hopefully bring things forward. But one of the real issues that we've seen really, and it's not particularly changed, to be perfectly honest, and I suppose it comes to the point that Matthew made about nuisance claims, is really completing significant due diligence prior to the process being commenced. And we've seen too often where we've become involved in cases too late, where once significant investigation work is completed, you do find problems with either the ethics or the version of events that both the lawyer and the funder have been given by their client. And what we are now starting to do is help the funding market, particularly with doing more significant due diligence at the early stages and ensuring that the claim is a good claim and that there aren't any sort of skeletons in the closet that are going to jump out 12 or 18 months down the line when you get to the crucial point and the funder has obviously committed to significant capital by that time. And it's really important, especially when we're talking specifically about Africa today, that those inquiries are completed in country and on the ground where possible. Because again, one thing that we find is that the version of events that you see solely reliant on desktop-based research, as opposed to getting in on the ground and making physical inquiries, they do differ quite substantially. And that can very much be the case when you're looking at rogue states or even large corporations who have significant assets across Africa. So it's really important to get out there and complete that piece of work before the case is really taken on board.
Thank you, Mark. I know that you've also emailed me a couple of specific things that you, I don't want to say war stories, but things that you've been through. So we'll touch on that in a short moment. I can say that there's a huge amount of topics that you've all very kindly sort of introduced us to there. And I want to get into a little bit more detail. Actually, a question has just come up from Simon Cooper of Taurus Capital here in Johannesburg, specifically for Nathan. So I'll address that first, if that's okay, and then I'll move on to a couple of other topics. I am reading it out. I think it might be on your screen as well there, Nathan. There have been calls for legislative regulation of litigation funding in Australia and other jurisdictions, particularly around class action claims. What recent changes or proposed regulations in Australia have been well received by the industry, and what regulations do you believe will potentially do harm to the litigation funding industry in the long term? Thank you very much for that, Simon.
Thanks, Rob. There's a lot in that. So in the last 12 months in Australia, there have been a Australian Law Reform Commission inquiry and report into class actions and litigation funding. And there is currently a parliamentary joint committee which is looking at the question of litigation funding as well. one of the outworkings of the Law Reform Commission is picked up in your second question, which is the recent changes to regulations in Australia. And one of the big changes is to regulate litigation funding, at least from a class action perspective, to require the funder to have an Australian financial services licence. So what that means is there's a whole range of compliance requirements that are imposed on a funder and obligations in relation to the corporate representatives and authorised representatives of the AFSL holder. Omni Bridgeway had supported that. We actually held a financial services licence some years ago, back in 2011, when the issue was first brought up, and then the corporate regulator in Australia decided to exempt funding from financial services licensing. In terms of what potential harm to the industry, well, as long as the regulations and reform are aimed at providing that service to the consumer, which in the class action space are the mum and dad investors, then that's a good thing, and that's one thing that we do support. We haven't yet seen regulations that have potentially done harm. They haven't been around long enough for us to really form a view on what it is that they, what do they force us to do differently. Frankly, to date, not much. But you know, it is this particular beast of the class action, and in particular securities class actions, that all of these regulations are directed at. And I'm happy to be corrected by Chris, but I don't think there's that much of a market for securities class actions, particularly in South Africa. I assume that Johannesburg Stock Exchange is probably the dominant exchange on the continent.
Thank you, Nathan. Chris, did you have anything to add to that?
Yeah, I just tried to unmute myself. Yes, I do have just this one remark. I think that it's unlikely that South Africa will be regulated in the very near future, but we must guard, I think, against exploitation by the use of this tool of litigation funding, and stick to what we're doing is good cases where the person has the right to be heard, and where the Constitution is brought to its what it set out to do. So in other words, we must be ethical about how we go about this work. You know, that's a very important aspect for me.
Thank you, Chris. There's obviously a lot to... sorry, Rain, did you want to add a point? Sorry, carry on.
You must unmute
Rain
yourself.
can't hear us.
I'm sure you're making a fantastic point, Rain. But...
Yes, sorry about that. I just wanted to make a point that, you know, when we look at the topic of regulation within the litigation funding space, specifically looking at Africa, the biggest change is actually a deregulation. So litigation funding actually being made legal and legitimate. Whereas, you know, the trend in, you know, the American Bar Association has just released like a code of conduct, and, you know, various kind of voluntary groups are merging with principles of conduct, etc. And then Nathan touched on the kind of landmark regulation case in Australia. I think the African narrative is actually one of not regulation but deregulation, and actually allowing litigation funding to become legitimate. I think when it comes to discussions around the regulation, that it's likely to take a really long time to get there, and I think it's most likely to emerge as a counter to some of the ethical issues that have been raised by both Patricia and Spakazi. So things around, you know, the allocation of costs, ensuring that litigation funders have, sound liquidity positions, and they have the capital to meet their investment agreements, stuff around disclosure and conflict of interest and that sort of things. But I think that's, in the very long distance for Africa.
Yeah, thank you, Rain. There's another question that's coming through one of the attendees, and I'm going to just expand on it if I may. Thank you to Ian for sending it through. He's asked, what are the core considerations for determining whether a case will be funded? But I suppose we can expand that to Sifakazi and Patricia and Mark as well, and sort of say what are the core considerations every party takes on to determine whether the case will be worked on. If I can take that question firstly to Chris, because he's not on mute. So Chris, would you mind core considerations, if that's okay?
Yes, the main consideration is viability of the case, and then the issue raised by Mark, namely a very good independent assessment of the version put up to you by the attorney or by the client, whatever it may be. And we take it as a matter of principle that we don't mind spending money on doing that part of it independently, because if you're going to lose a case, it's a commercial loss. And we're in this business to make money. It's not, we're not here for any other reason, but we also, at the same time, want to know that the case is a legitimate one and is worthy of being brought to court.
Thank you. And Patricia, can I come to you and just say, in your experience, is there anything that you, the core considerations for the cases that you work on?
I think the most important really is to have a very clear and honest picture of the case, to look very early on all the evidence, to insist on full disclosure. And that really goes for me as an attorney and then working with the funder. And here actually, I mean, coming back to what I call the dark side of arbitration, I'm wondering also in case of a funder, so if you are dealing with a case and you have convincing evidence of fraud, of corruption, of anything similar, is this not the case when we leave the area of ethical issues? This becomes really an area of illegality, of a criminal operation. And so I believe this is something that we should also raise here with Nathan and Chris. What happens in this case? For me as a lawyer, it's quite clear. I cannot continue in such a case. I cannot make statements that I know are false or that I know will support any fraudulent or corruption actions. What about funders?
As far as I'm concerned, I think, Patricia, you're quite right. I think funders have that very, very same obligation. And if they find out anything is untoward, they can't fund that case. And Errol and myself have actually very recently withdrawn from a case, despite the fact that it already cost us a lot of money, for that very, very reason you've just raised. We discovered there's something that wasn't told to us, we walked away from it, and that's it. I think that's very important. I think we must bear that in mind.
Thank you, Chris. And Nathan?
Well, going back to the question, which was what are the core considerations, there are really three: merits, the economic viability of the case, and recoverability. And we look at them backwards. So we look recoverability, and this is the example Chris gave: respondent can but won't pay. Economics. So what we're looking at there is to make sure that that the starting principle is that the client should take home the biggest share of the pie. So once the costs of running the case in terms of lawyers, experts, tribunal fees, if you're in the arbitration space, and our commission, then more than 50% is going to the client. and then merits, obviously. It needs to be a good case. You need to get to the point of being able to divide up the pie and recover the money. In terms of how we approach cases where there is that sniff of corruption, and the difficulty with some of the more, I won't say rogue states, but some of the more difficult states, is that they will throw out the C word, corruption, at the drop of a hat as a means of trying to muddy the waters with what is otherwise a fairly good claim. So yes, we take it seriously. And if we're not comfortable that it is an entirely baseless claim, then we walk away. It's, you know, we're a listed company. It's not worth our reputation to go and fund a particular claim, which is a vehicle for a fraud. That's not what we're about. And so please, Patricia, be comforted that we're not trafficking these fraudulent pieces of litigation around.
And Sivakazi, have you got anything to add on that from your side?
Yes, Nathan actually took the words out of my mouth. When we are acting for the litigation funder, the first thing that we do is we do a search on the to-be defendant to see whether or not we're going to end up with an empty order. That's an order that you're successful in the matter, but you're unable to enforce because the defendant doesn't have any assets. So the most important thing at the beginning of the process is to make sure that if we are going to be acting in a matter, whatever award we receive in the end, we'll be able to enforce and we'll be able to recover. Secondly, as a rule of thumb, we insist on advice on evidence when we're acting for a litigation funder from the beginning, from a respected, reputable senior counsel. We spend the money, sit down with counsel, go through everything, and at the end, provide client with an assessment of prospects of success. Those are the two very important considerations that we take into account in deciding whether or not to advise client to fund a matter.
Thank you, everyone. There's a lot to unpack already. Certainly looking at Simon's question there earlier, and looking at what's happening around the world, and obviously that's going to have a bearing on what happens here as well. But I've got a whole heap of questions from the audience, but also for myself in terms of where I want to direct the rest of this conversation. But there is one question that's come through that I would like to just address, just following on from what we've just discussed. And this comes from Chris, one of the attendees. He says he's heard on a number of occasions today that the merit of the case versus the ability to be remunerated. How do the panelists ensure this is established, I suspect, from the beginning? And what processes do the legal panelists put in place? I'm going to address that to, I suppose, Mark to start with, but I will want to bring it to everybody else.
Yeah, thanks, Rob. I suppose the processes that we put into place at the very, very outset, I go back to my earlier comment, really. It's going and looking for those easily enforceable, the phrase used is low-hanging fruit, and seeing what we can find. If you can't find anything in the early stages, I think both of the funding representatives would agree. You're probably going to be up against the case, and it's going to be a very difficult process to work your way through, and probably quite a costly process. Being honest and thorough with those initial inquiries, and ensuring that the information you're gathering is reliable and from trusted sources is really, really important, because it's not just your reputation as the investigator looking into this matter. You're also looking to protect both the reputation of the legal representatives that you're working with and the funders, because if you don't do that and you don't give them credible information that they can act upon or that they can rely upon, then the case is less likely to get funded, and obviously is less likely to be successful once you've gone through the processes, and a whole heap of time can be wasted progressing something that's really not really worth the merits.
Thank you, Mark. Does anybody else have anything to expand on there?
I agree with that, Mark. I mean, we've got a asset tracing team in-house, so that when these cases first come in, we go straight to our asset tracing team and say, guys, can we find assets here in a jurisdiction that we can enforce if we get to that point? And that forms the basis for the subsequent work, the hard work, doing that merits assessment. Because as Sivakazi said, you know, there's no point having a very expensive bit of paper at the end that you can't do anything with.
Excellent. Thank you, everybody there. The questions are starting to fly in as well, which is great. So we will get to all of those in a short moment. Like I said, there is a lot to unpack already. At this stage, there's obviously, I'm guessing certainly from all of your experience, there's things that have gone wrong or gone awry. Is there anything that the attendees that might be new to this space, litigation funding in Africa specifically, is there any pitfalls that one should watch out for? I'm going to direct that at Chris to start with. Obviously, I appreciate some of this may be sensitive, so if each of you don't want to share anything, that's absolutely fine. But is there any pitfalls that people should watch out for? Chris, if you wouldn't mind.
Yes, we've had some experience. Of course, litigation is not a certain thing. It's not a racing certainty. You sometimes, and that's why there is litigation, because there are two parties that are opposing each other, and it's an adversary system. So the other side has always got a version, but it's good for you as a litigation funder to look at what is the possible version that's going to be put up by the other side before you embark on putting up your own version. And then testing your own version, both against the law and the facts, is very, very important. And I can't agree more with Mark, but that is of paramount importance. Otherwise, you sit with this piece of paper which is worthless, and that's not where you want to be. What is also important is to have a portfolio of cases. In our case, we try and have these cases cross-pollinate one another. In other words, we don't put all our eggs in one basket. We have a number of cases which we use and which are used to fund the whole portfolio.
Thank you. We've just been distracted by somebody at the door, so apologies for that. We're going to specifically stay on this topic of pitfalls. Rain, from your research, is there anything that the attendees and people in the industry should be looking out for across Africa?
Yeah, I think just one, obviously my, war stories aren't really mine, but I find them. Just one point. I think, I remember reading about an instance where Nigeria had been given a $9.6 billion US cost order that pertained to some sort of contractual breach. So when you take that amount and actually consider the Nigerian kind of fiscal position, I think, a case like that could seriously compromise the country as a whole. And, when you then start to look at, as Chris mentioned, typically around the region of 50% of a payout to a funder, that's billions of African currency that's being shifted typically offshore into international funders. And I think, although it's legal and it's sound, and that's kind of the cost of doing business incorrectly in Nigeria's case, it does certainly raise a red flag. I think, ethically there might be, some issues with something like that.
Excellent. I'm just going around my screen. So, Patricia, from a pitfall perspective, your experience, is there anything you'd like to add?
Maybe one thing sort of from the other side of the table. What if you represent the respondent of a funded claimant, the respondent wins the case, it happens that the funder walks away. And that is something that needs to be, this is also why I advocate for transparency, not just for the name of the funder, but really the arrangement. Because basically, if you as a claimant have a funder on your side, you may be bolder than you would usually be, because you know that actually you have no risk. If you then even do not have the risk to have to cover opponents' costs, that changes the whole situation and the risk allocation in a case. So probably from that perspective, you may want to watch out.
Excellent, thank you. Sorry, Rain, you had a point?
Just to add to what Patricia is speaking about, these adverse cost risks. We have seen internationally predominantly a rise in insurance to actually cover those costs. And a lot of the larger funders, have started actually building insurance for that into their funding agreements. And, I certainly think that's a more prudent way to go about it from a personal perspective. And I hope that we start seeing more and more of that, as opposed to funders kind of just putting their hands up if, there's a cost order and they lost their case, or having to fit that entire bill themselves. I think insurance, is a great solution to that.
Thank you. Sifakazi, anything to add on the pitfall side of things? Anything you've seen from your experience?
No, I think, Rob, just to repeat the point I made earlier when I was introducing the attorney and legal practitioners' ethical obligations, just to make 100% sure that you're comfortable with your mandate, who it comes from, who's going to take ownership of the work product, and who you're receiving instructions from. It may sound like something that's not important, but for a practitioner, it's very important to make sure that all of that is worked out in the beginning between the funder and the client, so that you don't get caught in the crossfire. And I know, Chris, the last time we spoke, you gave us an example of some of the issues that you've dealt with. I unfortunately can't talk about mine, but as the funder, perhaps one day you can share your war stories with us.
Whilst it's not being recorded on Zoom, maybe, potentially. Nathan, you've obviously had a lot of experience across the world. Is there anything that maybe you've learned from overseas that we could be looking out for here, and also your experience on the continent?
I suppose the biggest issue, and this will address many of the things that Patricia's raised, is that if you're looking at funding, then look for a professional established funder. There's the sorts of issues that Patricia's raised are the sorts of things that you'd encounter in a fly-by-nighter. Whereas if you're dealing with one who's hopefully listed on a stock exchange somewhere, you've at least got some idea of what their financial position is. And the other consequence of them being listed is that it's highly unlikely for that funder to walk away from their obligations, particularly if they've committed to pay for adverse costs. And despite everything, the funder's got it wrong, they've lost the case, and that adverse cost liability is triggered. We are one of the funders that do have an ATE policy that sits across our fund. So that is generally part of the product that we offer for funding. So don't worry, Rain, we're not going to walk away. But to pick up on that point that you made about the Nigerian case, so a tribunal somewhere has found that Nigeria behaved badly, and as a consequence, someone was owed $9 billion. Most companies that would be a bet the farm type piece of litigation or arbitration. So we would look at it the other way, which is there's someone in the world who should have earned $9 billion, and because of something Nigeria did, they couldn't. And usually, because of what's occurred, they can't afford to prosecute the action to hold Nigeria to account so that they pay that $9 billion. unlikely that a funder would be taking 50% of that, although you'll be aware from some of the tobacco litigation in the US that the contingency fees charged by some of the lawyers did approach that level. But in that sort of scenario, we would see, obviously biased, but we would see funding as facilitating access to justice for that wronged party against Nigeria.
I personally would be very wary to take cases that have that sort of quantum. In all the years I've been in litigation, funding $9 billion US claims, few and far between, and usually are fictitious. So I'm very wary of that sort of thing. And when I say 50%, I mean obviously that 50% must be a reasonable figure. Our cases, the quantum ranges anything from 50 million to 200 or so million, but nothing more than that. Bigger claims I find very difficult to deal with.
Thank you. Thanks for all of it. I was going to come to Mark now on the same subject of pitfalls, because I know that he previously, when we were discussing before this, he gave me a couple of examples of some of the work that Eminent had done in a couple of rogue states and with regards to intel gathering. But it ties in quite nicely with one of the questions that has been asked by one of the, which has just disappeared from my screen, but I'll come back to that. From SmartRick, how do you consider hidden assets at the onset before ruling on risk of zero order? So perhaps, Mark, if you can dive in there with some of your, maybe if you can tie up some of the pitfalls that we need to avoid, but also asking that question about hidden assets as well.
Yeah, thanks, Rob. One of the real problems, specifically in Africa, is corruption, and I'm sure there's going to be a lot of nodding heads from the panel here. It's really sort of treading a very careful line when you're trying to progress some of your inquiries, because some of those inquiries that you're trying to conduct will need to be completed using legal assistance. And unfortunately, certainly in some of the more rogue states, finding the correct people to complete those inquiries can be very, very difficult. And you do need to tread carefully in the early stages if your instructions are to complete these inquiries covertly without the other party becoming aware that potential litigation is going to be pursued against them. With regard to rogue states, which are of particular difficulty, there's two examples that I sort of picked out where we've been involved in early scoping phases for funded cases, and they really sort of position themselves around natural resources and high value mobile assets that can be seized when they're in, as we said earlier, more friendly jurisdictions. Obviously, Africa is well known for having substantial natural resource assets, and even the rogue states can lay claim to that. And one particular case that we were involved in centred on a probably one of the most rogue states on the continent, and we were able to identify an oil tanker which was going to be moving a substantial quantity of oil to a friendly location. So we managed to deploy assets on the ground at a port, and it was really important to consider what flag the vessel was going to be sailing under, because that can really sort of dictate where you're going to seize the asset and how it's going to be done. Now, part of our senior management team, they have experience in planning seizure of these types of vessels and plotting the route and seeing where that vessel is actually going to end up or call in on its way to its end destination can be quite crucial. But that's an easy way, really, if it's possible, of looking to identify a high value asset that can not only be seized potentially, but also used as a prominent point of leverage in trying to settle a high value case. We also were involved in another matter where we identified a private aircraft which was used by a prominent politician at this particular second state. And through inquiries, we were able to confirm that that particular aircraft was going to be visiting again a friendly destination, and feed that back into the funder for them to take forward with regard to either seizure or using it as a point of leverage. Now, neither of those two assets met the full value of the claim, but they were significant parts of it. On the other side, and comes again back to what we discussed earlier of completing those inquiries on the ground, on review of a high value property asset for a business situated in Africa, the desktop based research suggested that this particular asset was going to be worth tens of millions of dollars. There was lots of pretty photographs on the website, lots of maps showing where it was. But then when we followed this up with physical inquiries on the ground, the case couldn't have been more different, whereby firstly the asset wasn't where it was reported to be. And then when we did locate the area of land that related to that asset, it was literally a pile of dust. There was nothing there, and it was effectively worthless. So that was a really important point to cover for the funder, because on the face of it, they had an asset that was potentially worth tens of millions of dollars, and actually it wasn't worth $1 million when we actually got there to actually confirm the physical identity of this particular property asset. And I think it, again, it comes back again to, and I know I keep repeating this, but I think it's really important doing that piece of work early on to ensure that you've got a solid case to progress. And one point I did really want to raise, and I think it's something that maybe one of our two legal experts can take forward. It's the issue of enforcing in Africa with judgments obtained through arbitration, because once you've got that judgment, it's not necessarily game over, and enforcement is going to happen, because whilst some African states recognise the convention, actually enforcing the judgment in country is a completely different kettle of fish, and they will pretty much play lip service to that judgment, and it's nigh impossible to actually take it forward. So actually getting the judgment and enforcing it are two different phases in our view, and we've been brought into the look at cases where judgments have been obtained in arbitration proceedings, but we've had to go and look for assets outside of the country concerned, because they refused to recognise the judgment.
Brilliant, Mark. Thank you for that. And I will direct that point about enforcement to Patricia and Sifakazi, if I may. But I would like to almost tie it in as well with a question we've got from our attendees, from Hazel. So thank you, Hazel, for sending this through, which is, she said, from a legal risk perspective, how does an attorney guarantee or provide some assurance to the effect that the case will be won, because a funder would want to fund a case with prospects of success, as mentioned by the panel? I know we've answered some of that, but if you could maybe Sifakazi, if I could direct it to you to start with, just from an assurance perspective. And
thanks, Rob. I don't think any attorney should ever tell you that you're guaranteed success in a matter. I think all an attorney can do and should do is inform you of your prospects of success, inform you of the strengths in your case and the weaknesses in your case. So if anyone ever comes to you and says, I promise you success in this matter, run. rather ask them to provide you with advice on evidence from a reputable senior counsel so that you can make an informed decision on the merits of the matter. Does that answer the question, Rob?
Yeah, absolutely. I do like the point about running away as well, yes. Patricia, do you have anything to add to that?
Yeah, I couldn't agree more. This is absolute. There are no guarantees in litigation, and anyone pretending to give a guarantee, something is deeply wrong here. And on your points of enforcement, I also think, well, any difficulties that you have in the merits of the case or that come up later will translate into difficulties in enforcement. So if there are objections and, for example, evidence comes up later, that will create a hurdle in the enforcement. So it's not that because you have an award or a decision, you can just take it and run. And still, as a funder, I believe you still have to look into all of this, even if there might be some information that comes up only later, and there are a number of these situations around the world.
Thank you. You had your hand up there.
Yes, just on the enforcement of arbitration awards issue. Obviously, I'm a practitioner in South Africa, so I can only speak to the South African context. But the Arbitration Act makes two provisions. In your agreement to arbitrate as the parties, you can agree that the arbitration award will be made an order of court. And that can be done by the successful party on the unopposed roll. Very easy, and you enforce your award. If that clause is not present in your arbitration agreement, you would have to apply to the High Court, and that's catered to by the Arbitration Act in Section 31, to say, I have an arbitration order, I'm now coming to the unopposed motion roll at court, and I want to make it an order of court. There can be opposition in that instance, but that opposition can easily be dealt with in terms of the normal procedures of opposed motions.
Can I just ask Mark a question, and that relates to foreign immunity in the UK, because foreign states do have immunity in the UK, and how does that impact on the tracing of assets in the United Kingdom?
Chris, that's it's not something we've come across in one of our investigations. Really, I'd have to come back to you with that answer. But certainly, there are only certain assets that would be protected or banned under any sort of enforcement, and they would be particularly based around things such as embassies and that like. It's very important to in those early stages to identify as many assets as you possibly can, so you have as many options open to you when you come to the enforcement phase.
Okay, Nathan, you wanted to...
Yeah, and just to expand on that point that Mark just made, which is when you're looking at these cases, either at the merits phase or at the enforcement phase, you must have an enforcement strategy that's multi-pronged, and you must have a number of different lines of potential enforcement options that you've got just in case something goes wrong. And that may require or does require a multidisciplinary team. So the point that Mark made, you need to find the asset, you need to overlay that to the legal regime where that asset is located. Can you actually put your thumb on that asset through the legal mechanisms available in that jurisdiction? And is that asset sufficient to meet the award, either strategically or actually? So what I mean by that is the example that Mark gave about the private aircraft doesn't satisfy the award, but gee, that person who has that aircraft, they're now very inconvenienced, and I'm sure you'll find that they'll do a lot of things to make that inconvenience go away, including arranging for the government that they're a part of to satisfy the award that has been awarded against them. Chris, to pick up the point about Sovereign Immunity Act in the UK, you're right. So that that codifies the common law now. So you've got your criteria. If you fall into one of the categories, then you can go to the courts and enforce. And bearing in mind, there are two types of immunity. So you've got the immunity from jurisdiction and the immunity from execution. When we look at cases where there is that angle, one of the parts of that legal overlay is, do we have a sovereign immunity waiver, both from jurisdiction, but very important on execution and enforcement? And that's part of the analysis that we do on that jurisdictional basis. A lot of cases we see where the client hasn't got that waiver in the clause, in the agreement, and that makes it very difficult to enforce and potentially not fundable. So take away from that, make sure you've got a team that can put together a strategy that can get you those redundancies to make sure that you get that successful enforcement. And I'm not saying that because Omni Bridgeway has that, but we do. Thank you, everyone.
I'm obviously very conscious of the time, and there's a huge amount we could probably sit here and discuss this all day, but I want to make sure that the questions that have been sent in to me either today or earlier on this week just get answered. And they do cover everything from the legal aspect to the funding aspect to the research aspect. So there's probably a question for each of you, which I'll run through. They might not necessarily flow exactly what we've just been talking about, but I want to make sure that people get their questions answered. This one goes directly to Sivokazi and Patricia, and I'm going to put, well, it's two in one really, because it kind of touches on the same subject. Somebody asked, what activities can a lawyer do to cause change in policy in regards to litigation funding in countries such as Uganda? And then the question also came in saying, if South Africa introduces litigation funding agreements by means of voluntary third-party litigation funding agreements, would this have an effect on the law currently applicable to contingency agreements? If not, then how? So I appreciate they're not exactly the same subject, but I suppose I'd like to direct to Sivokazi first and then come to Patricia, just in terms of what activities lawyers can do to cause change in the policy.
Okay, I'll start with the second question, dealing with whether or not it would impact the Contingency Fee Act. It's two separate forms of funding. The contingency fee arrangement is between an attorney and his own client. And you engage with them and you say you will receive payment of your fees if and when successful. And that is capped at 25% in terms of the Act. Litigation funding, which is currently unregulated, is a different mechanism. It's third-party funding. So any regulation of third-party litigation funding would not necessarily have any impact in contingency fee arrangements, because attorneys would still be able to work on a contingency fee basis for their clients without a third-party funder becoming available. In relation to the question dealing with Uganda and law reform, in order to cater for, or to rather deal with the situation of litigation funding, the best mechanism, I think, as lawyers that we can utilize in order to see policy change is through our own professional bodies. We would do it through the Legal Professional Council of South Africa, the Law Society of South Africa. So I would suggest any practitioner that thinks they want to be part of change or they want to influence policy changes in their own jurisdiction, as a first port of call, look at your professional body and see if anything is already being done, and if not, maybe galvanize and make sure that it does happen. Thanks, Rob. I'm going to hand over to Patricia.
Patricia?
Yes, thank you. Frankly, there is not a lot that a lawyer can do to change policy, right? I mean, this is something that is part of what we do. I believe actually in information, in publicity, in disclosure, and making this a public topic, and in raising awareness. Because as I mentioned in the beginning, the problem that we have, this is usually cross-border, no one really feels responsible. This is the problem that we see. Everyone looks at its own, his or her own very narrow role, does not look left or right. It's even difficult to interest the authorities, because you say, well, which authorities of which jurisdiction? So I would say really what we need to do as lawyers is to be very explicit, to be very outspoken, and to be on the forefront of this. And I'm saying this really, I mean, with full conviction, because this is something that where we have to stand up. It's very easy to just go with the flow, but we also need to be aware that if we do this, we are not just supporting this, we are not just passively going along, but actually we are becoming accomplices of this. And, you know, I would say as a lawyer, you really have the duty to speak up, and to speak up wherever you can, including in webinars like this.
Nathan, thank you, Patricia. And Nathan?
So in the last 3 or 4 years, we've been involved in causing this change in policy in the arbitration hubs in Asia, so Hong Kong and Singapore. Rewind 3 or 4 years, Hong Kong had maintenance and champity as crimes, and people did go to prison for engaging in funding arrangements. That met against another policy that both of those places wanted to put in place, which was to make themselves the preferred arbitration hubs of Asia. Now, the practitioners in those two jurisdictions went to the Ministry of Justice and the Department of Justice in Hong Kong, and they said, look, we're missing out on work here because you've got this rule against maintenance and champity which stops litigation funders. So you want to be this arbitration hub, but you're excluding yourself from all of these good claims that funders are funding. They're going up the road. They're not coming to Singapore, they're not coming to Hong Kong. And once it was put in those terms, change occurred, first in Singapore and more recently in Hong Kong. And you know, we're funding arbitrations in those two places at the moment. So it can happen.
Yeah. Thank you, Nathan. Having spent 9 years living in Hong Kong, I know very much about the jealousy if Singapore did anything first, and vice versa. So yeah, I'm not surprised there was a bit of a race to do it at the same time. Rain, you just put your hand up.
I just wanted to make a point that just because litigation funding is made or legalized within a country doesn't per se mean that many cases will secure funding. And I think a big aspect within the African narrative is the robustness of legal systems, and that which is something that hasn't been brought up today. But the ability to predict what's going to happen within that court or tribunal or whatever the case might be, obviously affects the risk of investing in that case. And so I think, an important step is not just making litigation funding legal, but also to ensure that, your judicial system is neutral and can be trusted and is predictable. Its robustness.
Thank you, Ray. There's a couple more questions before I obviously let you go. But the question from the attendees from Swala, so thank you for sending this through. And I think we've kind of touched on this already, but I'm not 100% sure to who to aim it at. So if anyone wants to jump in. But Swala asks, following on from what's been discussed, what role, if any, does insurance play in determining risk reward in litigation funding? So perhaps, Chris, if you don't mind just answering that quickly.
In our experience, insurance doesn't play a role. Of course, there is insurance possible in South Africa, and I suppose in most countries in the world, in terms of which companies take out insurance to guarantee their debtors book. But that doesn't play a particularly big role in my experience in litigation funding.
Okay, thanks, Chris. I've got two more questions, which would be specifically, I think, for the funders on the panel. And then there's one last one, which I'm going to direct to all of you. And this, again, has been emailed in earlier on this week. I suppose these two questions maybe go hand in hand, but I'll start with the first one. Will funding firms ever be hesitant to support claims against big multinational conglomerates on matters where they themselves could be exposed to countersuits from big corporates who arguably would have more capital to fund litigation than the funding firm itself? So Chris or Nathan?
In my experience, the answer to that question is simply no. We do not worry about the size of the opponent or its ability to do what. But I think the point that is valid is this, is if you're bringing a frivolous, vexatious or slanderous type of litigation, you must expect the consequences of that. And I think quite rightly, a corporation that is being harassed by vexatious litigation would be very entitled and absolutely entitled to bring an action against the funder who made that possible. And I don't see anything wrong with that. I think that is one of the things that funders have got to bear in mind when they're funding cases. And it fits in nicely with what Patricia said. It's either got to be ethical or it becomes a dark side, as she quite rightly points out.
And Nathan?
We would absolutely not hesitate in funding a claim against a large corporate. It's one of the things that funding does is it provides access to justice. It levels that playing field. So you've got a claimant or a plaintiff who wouldn't necessarily be able to afford the best way of prosecuting their claim against someone on the respondent side who has much deeper pockets. And echo what Chris said, we look at things as an investment, and it's not a good investment if it's got the sorts of things that the example that you gave with the Chevron claim. So someone that's procured by fraud and bribery, that should have been picked up in our due diligence process.
Excellent. Thank you, Nathan. This penultimate question, again from the audience, was specifically about environmental issues, which I guess would be sort of all-encompassing from a mining and energy perspective. But, the question was, has there been a recent surge in request for funding of litigation with regards to environmental issues across Africa? I suppose that I'd have to direct that at Chris and Nathan. Is it something you've seen recently, or yes, please feel free to answer.
I've not experienced that. I think South Africa, and I can only talk for South Africa, is in the grips of a multitude of difficulties which and environmental issues are not very high on the priority list. So we haven't seen many of those sort of claims. I don't know whether Sipakazi has seen any of them.
And Nathan?
We do get approached with these sorts of claims. We haven't funded any for a whole range of reasons, but I do see in the media in the last couple of weeks that Anglo-American is currently before the courts, I think in South Africa, in relation to some lead poisoning issues. We've seen those around the world, not specifically just on Africa, but certainly there is a greater awareness amongst people that these sorts of claims are possible, and they're starting to approach funders to put together classes to prosecute the claims.
Okay. Yeah, fairly specific question there, but I think in terms of the final question that I wanted to ask you, fine panelists, unless obviously after that, if there's anything that anybody wants to add. But this last point that someone asked was around the potential for the African continent. in generating significant wealth internally within African countries. I'm going to come to Rain first on this because it's something you touched on in your research report. And it's really just a general prediction of how litigation funding might emerge across Africa based on the rest of the world's progression, which Nathan's obviously touched on already. And the question was who might win out of all of this, but it's more about what is the potential?
Sure. So I think, already we're seeing a number of institutional investors on the continent, predominantly domestic, but international as well. And we're seeing, though, predominantly the bulk of litigation funding is actually being run by private investors, and they're dominating the African market at the moment. They're on the ground. Very often these are attorneys or advocates or someone very familiar with the law that has an ability to very quickly assess the merits of a case, and they're usually partnered with hedge funds or trusts or something of the sort, and they then go pursue these claims. And I think the bulk of the growth originally is going to be with private investors on the continent. But I think over time, as the more developed markets become more regulated, as will turn on Africa as, new markets with, less regulation that, offer a regulation-free investment. And, I think as well, with firms starting to list internationally, there's always the option of getting involved in litigation funded by purchasing shares. And, I think it's certainly opening up litigation funding to benefit, those beyond just the traditional beneficiaries. I think it's difficult to say that, I think it would be wrong to say that we would see a similar trajectory of growth that we've seen in places like Australia and the UK. Their growth was largely centered around, this emerging as an investment during the 2008 financial crisis as something that wasn't linked to debt or equity markets. Within Africa, I think the narrative will be slightly different. It'll be a different time. I think also litigation funding as an investment tool is growing and shifting. And as Chris touched on, there's the emergence of portfolio investments where you lump various different cases together, and by creating different kind of risk strata within that, you can actually minimize your risk and potentially even, getting to a stage of selling off parts of that portfolio to private investors and actually pooling resources to fund these portfolios. So I think it's a really interesting space, and how it plays out exactly, I think we're going to have to give it a bit of time to play out.
Brilliant. I'm gonna go around my screen again and just ask each of you individually about the potential for Africa that you see. Chris, can I ask you?
Yes, I actually think there's a massive market out there. It's vast. In the 20-odd years I've been involved in this business, and Errol has been involved with me, we have never advertised or solicited any case. They have come to us because of word of mouth, and there's a very big market. So there are many, many people in South Africa that have solid, decent and good cases which they just simply cannot afford to pursue. And that's the market we should be going for, and to give those people their constitutional right to be before court, which I think is a very useful function which litigation funding fulfills.
Excellent. Patricia?
Very briefly, I mean, looking at it from the outside, of course, Africa is a very significant market and quite prone to litigation funding. and clearly it will give access to justice. But we also have to balance everything else that we were saying in this discussion. And my takeaway also from listening to you, Chris and Nathan, it is very clear. It is for you that it's an investment, it's a business decision. Absolutely fair. If I look at it as an attorney, I represent a party, I represent their interests, and that may be beyond the mere, or maybe also different from the mere business decision. And if we then look at investor state, here it becomes even more marked, because as an investor in a state, you have, this is a very protected system. It's a unique system, and basically it protects the investor and the interests of the investors. So I would say, I mean, I'm not against, obviously, litigation funding, but I think it is very important to put it on the right track and to deal openly and transparently with all the issues that it has, because it does have the potential to simply change the nature of a litigation.
Thank you, Patricia. And Sivakazi, if I can come to you, what do you see as the potential for the legal sector, the investment sector across South Africa and across Africa?
I agree with absolutely everything Chris and Patricia just said. So I'm going to keep it short so that I don't repeat what has been said before. But I do honestly believe that there is, besides there being a market and huge potential for growth for litigation funding in South Africa, I do think there's a need for it as well. I think there are a lot of claimants in the country who just cannot afford to pursue their claims because of financial constraints. It's good claims, it's claims where you can comfortably predict the prospects of success. The only deterrent is the funding. And so I think with South Africa also being a fairly stable context in which to litigate, I think it should be a priority to any litigation funder that's looking to break through into the African continent.
Brilliant, Sivakazi, thank you. Obviously, Rain touched on earlier with access to justice for all, and I think you touched on it there as well. So, Nathan.
Right. Well, one thing I think it's important to remember is that Africa is not one homogenous system. There's different aspects of different parts of the continent which have attractions and also risks as well. One of the things that will continue are the arbitration claims, both from a commercial perspective and an investment perspective, particularly as nations transition from that traditional resource nationalism into a more broader nationalism, and I won't say expropriate because that's got a particular meaning, but forcing foreign investors to take steps to protect their investment. As rule of law in some of these jurisdictions improves, then I think we'll start to see litigation funding descend from the arbitration world into litigation in these countries. One thing that I would flag though is this issue of, we focused a lot on inbound investment. So people coming into Africa and taking action because they've lost their investment or some problem with their contractual arrangements. One thing I think we shouldn't lose sight of is that there are undoubtedly a number of African parties who have claims outside of Africa. And they might not have the wherewithal financially or practically to be able to pursue those claims. And what litigation funding can do for those parties is to say, well, okay, you've got a claim against someone in the UK, come to us, let's devise a strategy and let's get your money back. The other area is for the banks in particular, financial institutions, a lot of non-performing loans going on, and there's a lot of obligers who have guaranteed those loans that have fled the continent, and there's a debt that's owing that's not being pursued. So For the financial institutions, there is also a separate opportunity there to try and recover some of those loans that are not being paid back as well. So I see the future of Africa in the litigation funding space to be very bright, and very excited to be doing funding there at the moment.
Yeah, thank you, Nathan. You definitely brought up a point we probably should have brought up earlier there in regards to outbound outbound cases as well. We'll save that for part 2 one day. And also, yes, obviously you made the point there at the beginning, which I think Rain also made the point of. It's difficult, and apologies to anybody listening in. You know, we're talking about Africa as if it was one big market, which I know from my time in Asia that a lot of foreign investors make the same mistake and treat Asia as one big market, but actually it's a multitude of different markets. So apologies to people out there. But and Mark, would you mind making a final point in regards to what you see as the potential for growth in Africa from your side of things?
Yeah, thanks, Rob. I think the opportunity for Africa has always been huge. One of the things that we see that puts people off is the difficulty in the enforcement process. I think as we come out of the pandemic, the various economies across Africa are going to want to grow faster than they would have liked to in a relatively short period of time. I think that's really going to force some of these more difficult jurisdictions to come to heel when it comes to attracting investment and really recognising more substantially the enforcement process and making it maybe a little more straightforward and easier to enforce some of these judgments. I mean, our discussing it with our director down in South Africa, Chris Aycock, who's been working in the market now for some 20 years. There is definitely appetite and there is definitely movement, and money is starting to emerge, and Africa is becoming a more attractive proposition for not only investors but funders who want to take on cases that they've probably not considered previously. But I do think the resultant pandemic, and as we come out of that, is really going to bring these countries to heel and make it a lot more easier and a lot more attractive to take cases. And of course, that works in reverse as people invest in significant projects in Africa. The people who are investing, that also opens up asset seizure opportunities where they're based. So it's going to work on on both sides really as we move forward.
Yeah, thank you very much. I mean, all that's left for me to do really now is to say, obviously we've had a few thank yous coming in from those that attended, and that's very kind of you. I want to say a big thank you to Rain and her team for putting in the hard work on the amazing piece of research which we released earlier this year, which I think is still the only report of its kind available in the marketplace in terms of addressing and introducing litigation funding in Africa, that has led to this brilliant discussion. I cannot thank the panelists enough, each of you, Chris, Rain, Nathan, Sipokazi, Patricia, Mark, and of course Natalie, who's sitting in front of me over here. So, but thank you so much for sharing all of your insights and your thoughts. Like I say, from the thank yous that I'm coming through on my screen, everyone found it very interesting. And obviously, thank you to all the attendees for their questions. I think it's now time we let Nathan get on with his evening in Australia, and everybody else get on with their day in the UK, Europe, and in South Africa. Thank you so much, everybody, and keep well, and we'll speak again soon. Thank you very much.
Yeah, many thanks, Rob.
Thank you.